Good morning and welcome to the Invest with Rules member ticker submission video. This is always a really fun one where we get to see what you're using, what you're looking at, and then apply it to our trend roadmap analysis, apply it to our billion-dollar fund manager reports. Mike, it's Scott Bennett and the great Mike Olafson. Mike, how are we doing this morning? Are you ready to dive into the member ticker submissions on October 17th, Friday?
Absolutely. We'll make some comments about the market first and then dive into the tickers. I believe we have 24, so it's going to be chock full of fun.
Awesome, here we go. And before we do, as per the usual, this is just information. It is not a direct solicitation. Please always manage your risk. There's been a lot of volatility and risk recently. There's been a lot of controversy around some commercial bank loans, which is scaring the market. There's geopolitical tensions. Manage your risk, manage your financial plan. You know the
Uh,
dance. So, what we're going to simply do is talk about the stock market score. Mike, do you want to kick us off and what you're seeing?
yeah, so the stock market scores kicked down to an 8. And if we take a look at what's going on with the S&P here, about a 1 year or so chart on market surge. And we've commented in the past couple of videos that the market, if you look at the S&P, it's pulling back. It kind of bounced off the 50 and the market surge charts. The red line is the 50. 21 is the 21-day. I'm sorry, the green is the 21-day EMA. Black is the 200-day SMA. The S&P 500 has been kind of in this range. I think the Qs as well, where over the last week it's kind of within the last Friday range. Last Friday was the big day down. And so I don't think the market necessarily is doing anything wrong here. It's consolidating. I'd certainly like to see it go above and make new highs to really kind of regain confidence, but certainly not dip below the 50 or that Friday low. What's kind of concerning is with some of the stuff going on underneath the surface that the market kind of hides. What are your thoughts, Scott?
Yeah, today's options expiration on a Friday, so I would
Yep.
expect a lot more volatility as options traders are trying to push prices to their desired strike prices. So at the end of the day, this could look totally different, up or down. But I'd say the stock market scores at an 8 now. So high is a 10, 0 is a 1 is the strong downtrend. So the market is still holding up. You can see it above its 50-day moving average. We'll go into our exposure, but in general, you'll see that it had a shakeout last Friday because of renewed tariff talk and challenges around rare earth metals, which is really important to many industries in the United States. And the long-term trend keeps chugging along since May. We had kind of a lot of exposure put on in mid to late April, which is still holding on. So what we'll do simply is look at our gauges of how we operate, and please manage this to what fits best for you. So again, stock market score has gone from a 10 to a 9 to an 8. So our exposure is 74%, of which our beta, a beta of 1 equals the S&P, we're at 0.7. So we're taking less risk than the overall market. Our portfolio heat, so if everything hit their trailing stops, we're at a negative 3.8% overall risk at the moment. Obviously, that doesn't account for any gap ups or gap downs and all the rest that could happen. So if we move to the next section, this looks at the broad market and the sector gauges. And very simply, off to the far right is relative strength, off to the far left is extreme kind of challenging weakness. And this rotates a lot, and this is designed to help us see that rotation. This is the Invest with Rules signals and trends. And very simply, you're seeing gold, despite having a little bit of a sell-off today, still on an overheat. Same goes for utilities, who are going to power these very energy intensive data centers. You're seeing, I mean, what's not great is you're seeing healthcare all the way to the far right. That's not great. You're seeing things like small caps kind of waver around. Staples have gone from the far left to the middle on a U-turn. So short term is now up, long term is now down. So that's not positive. You're seeing uh, real estate sector. It's kind of interesting how that maybe that was washed out, kind of heading to the right, materials to the right. And what's not doing so well, obviously, Bitcoin. We've greatly minimized our position. I know a great member had a question about wash sales. We care more about principle, maintaining capital than taxes are important. Don't get us wrong, but we really, really care about preserving principal as quick as we can. So, and also you'll see XLC, which is like Google and Meta, that's really been struggling. So that's what I'm seeing on the top row. Anything you'd add or anything on the mega caps on the row below stand out to you?
No, yeah, on the mega caps, I think you're kind of seeing some of the same of what you just covered, kind of a bit more detail. Interestingly enough, you got Apple, Lilly, and Walmart, and Tesla in the top four. Kind of an interesting mix. And down on the far left, you've got Amazon, Meta, and JP Morgan Chase. Banks, obviously, big banks have been faring a lot better than the regionals, but interesting nonetheless.
This is sorted based upon our short-term volatility adjusted momentum. So we're looking at roughly a month. We're looking at volatility. So that's how we're judging this and how we're aiming. All right. So we're going to talk about the billion-dollar fund manager funnel just for a minute, so you kind of know when we tell you this is an what number this is on our report. So there's about 6,000 traded stocks in the United States. We are looking at around $1 trillion of our analysis of what these billion-dollar funds are buying. That brings us down to about 600 stocks. We're doing a couple cuts. We're cutting for accumulation, we're cutting for earnings growth and earnings growth estimates. Sometimes it's acceleration when it comes to maybe they don't have earnings, but the sales are booming and they're just kind of losing less. So it's this acceleration. And then you were looking for relative strength and performance. So that helps us bridge the gap between our data and current day. Final move is we look at the trend roadmap. And very simply, the trend roadmap is a multi-time frame momentum model that's designed to tell us should we consider hitting the gas in short-term and long-term uptrends? Is this a topping time where a lot of positions are slowly, sadly moving? Where we'll be conscious of risk and start to de-risk. And then stage four declines, or that's when all the pain and the torture happens. So we will very much de-risk in that environment. That happened if you think back to March of this year, or maybe go back even further to like 2022. That was a very prolonged stage four break signals. So very simply, that gets us down to our model. So, Mike, we're going to cover a ton of tickers for some great members. Here's kind of the major list, and we're going to do it alphabetically. So, we're going to start with, I think, two members had Arista Networks. Mike, why don't you kick us off on Arista?
So Arista Networks is actually just reverted to a coast today, coast signal. It's been on a pretty strong gas since the lows in April, and it's been minding that 50-day pretty well up until about 4 days ago, where it closed below it for the first time since actually right around, yeah, back in April, really. So it's holding up okay. If you're in this, I'd want to see it hold kind of that 138.5 level that the market surge chart shows. I kind of want to see that. It's kind of that would be my line in the sand personally. But if you're looking to get in it, I'd like to see it kind of start making a move back up again and go back to a gas before I got in it if I wasn't in it.
It just, yeah. So, Kirk, this is the top is a market surge chart where customers and the bottom is our signal. So, you're on a new short-term downtrend. Their storyline is they're maybe didn't get as much favorable deals as other networking cloud companies. So, it's been a great company with great earnings and sales, but the funds have been holding, which isn't helpful. So, you had a gap down, call it 4 days ago. You filled the gap. And I'd be concerned that you roll underneath the 50 and maybe you kind of go and fill this gap down over here and maybe form a new base. So I would be a little bit cautious at the moment. That would be my stance. If we keep rolling, since there's a lot of tickers, okay, Glenn. Glenn gave us Amphenol. Amphenol is electrical, electronic, fiber optic. This has been a great stock in 2025. Short-term, long-term uptrend. That came actually before most of the signals came from the market. So that was showing extreme strength right away in April. It's up almost double digits this year. Maybe since January, it is up over triple digits. So pretty impressive. The funds went from buying to holding, which is not favorable, but you're just kind of in this tight consolidation range. Um, Obviously, it's gone up a lot. If it were me, I would expect it at some point to kind of come back down, test that 50 if there's more pressure in this market. I don't love that the funds are now holding, no longer buying, but any other thoughts there, Mike?
Yeah, first off, in full disclosure, I do own a bit of Amphenol, so have been following and familiar with it. But as far as, it's kind of interesting between Arista Networks last stock and now this one. Stocks have certain kind of personalities. And ANET was minding the 50, and now Amphenol, you'll see, has minded the 21 day, pretty nicely and politely back since the April bounce back. So as far as if you're in it, Glenn, I'd say just mind your risk and use whatever risk parameters you use. 120 could be an area of support, maybe that's kind of your line in the sand, or lower, maybe down to the 50 if you want, but definitely mind your risk. And if you're looking to get in it, I'd say at this point, I want to see a little bit of a bounce and get over to new highs before I would get in it if you're not in it.
Yeah, I think that 120 looks pretty interesting. Okay,
Yeah.
Greg gives us uh, Astrana Health. I don't know this one very well. I looked, I think it was a market cap of just a touch over $1 billion. So it operates a physician-centric integrated health management company. You do have double-digit earnings, which is pretty impressive. It's obviously been pretty washed out. So it's been kind of hovering under 40 for a long time. And now you are forming this is on the market search chart, a flat base, which is kind of interesting. You have a short-term and a long-term uptrend. The funds are not here. But this is interesting. I mean, obviously, this if someone's going to go hide and they're looking for growth in the healthcare space, yeah, I think on 10-3 would have been your enter to be up 10% already. And then today would be day two of the long-term trend. So I think this is kind of interesting. Obviously, could this come back down and smack back down and test one more time on the 200-day simple moving average? I think why not? But I think this is kind of interesting from a technical perspective. Big funds know trend. I think Greg, maybe you're onto something. Anything, Mike?
Yeah, I think Greg, yeah, this is an interesting setup. I'd worry a little bit about the overhead resistance kind of going back to the left in the May time frame where you got a lot of folks that are in at higher prices, and kind of how that affects a possible new uptrend. But it's setting up nicely. The flat base that market search shows is roughly 15 to 20%, and it's about to hit a buy zone. So certainly an interesting one. And also last attribute, you got the 200-day, the black line, that not only is it above, obviously, but it's starting to curl up, and that's always a little bit of a good sign too. So some positives.
Yeah, bearish to bullish reversal. As long as it holds this consolidation area around 30-ish, like 29, that looks decent. So thanks for sharing that one. Loan gives us AST space mobile. I've heard people say different things, but this is pretty much broadband in space. So they've done a lot of partnerships. Earnings are not there, but obviously the price could care less. It's in a short-term, long-term uptrend. It's been there for a while. So, and you kind of had this, again, there's no funds here, but you've had a really kind of a very difficult cup. And then you saw volume in a really sizable breakout closer to that 54, 55 range. To me, this looks like it's coming back down. So I'd be cautious. I would say certainly you're probably going to fill this gap at some point, form another base. So I'd be cautious. I think if you're in it, great. If you're not, I would say be really patient. Any other thoughts on AST?
Yeah, loan, if you're in it and you got in it 30 days ago, 28 days ago, and you're up, as high as 100+%, and now you're at about 85% up. Just mind, like Scott's saying, mind your risk, and you may want to start kind of skimming some off the table, because this thing looks like it might be coming down. Yeah.
Yeah. Do you want to go? So Tim gave us a ticker, and this is a tough ticker. Any thoughts on BWX technologies in the power generation world?
Absolutely, yeah. Let's kind of be clear here, though. So Tim submitted BWTX, and we couldn't find a thing on it, so we assume it's BWXT. So Tim, if we're incorrect and it really is that BW2X or something else, please let us know. Just email us, and we'll go ahead and do that for you, do that analysis. But assuming it's BWTX, it's BWX Technologies. Oh, by the way, BWXT. I keep saying, yeah, see, I keep reversing it. So BWX Technologies, it's on an overheat. Definitely, it's had a really kind of interesting move off of that cup. It went through the buy zone, and so if you're in it, I'd say keep minding your risk and use whatever parameter you want to use, Tim, to mind your risk, possibly 21, possibly 50, or whatever it is that you choose. But it's doing absolutely nothing wrong. A little bit of a pullback today, and market's kind of wacky today. And yeah, Scott, what are your thoughts?
Yeah, I think if you're in it, great. There's actually not that much the challenges here. It's just kind of
Yep.
overheat, so it's just a pause.
Yep.
If I were new capital, I'd be patient, but no, this looks great. Well done. Bart gives us Chubb, so we're in the Swiss property casualty space, and a lot of property casualty insurance. There's some loans going wrong in the U.S. And what does Jamie Dimon said? If there's one cockroach, there might be more, which is never a fun comment. So you're seeing, unfortunately, a short-term and a long-term downtrend. The funds are actually have been selling. NI is needs improvement. The funds have been selling. So I would politely stay away. I know the PE is 12. And this year it's really had no earnings. Next year it should be increasing. It would not shock me. I'd love to see it hold this low from 2 days ago,
Yeah.
but could it hold this 264 range? I'd hope. If not, I think it's going lower. Anything else on Chubb before I move forward?
Yeah, I think you nailed it. And this could be a dividend play. I don't know, Bart, if that's maybe why you might have it if you do. I think the yield is around 1.4, 1.5%. But yeah, I'd say my line would be the bottom of that base that market surge is showing that Scott pointed out. And it's already on a break. And I would personally, I would escape at that point. But Bart, please follow your process.
Yeah. Okay, so Chad gives us Cadre Holdings in the critical protection to those working in and around hazardous or life-threatening situations. I don't really know what that totally means, but it sounds like they're doing a nice job. So we have a company that is earnings positive. They're in a short-term, long-term uptrend. It is on an overheat. You're at the top of this base structure. RSI is 78, so that's really stretched up there. And the funds are not here. If you're in it, I don't see anything wrong. If you're not in it, I would definitely consider it should probably pause here. And then it seems to have this psychological level of $40, and it seems to have broken out. So it would make sense for it to test it and then run. So I think once the overheat comes down a little bit, I think you might have yourself something interesting. And we took these snaps from this morning, and the market's been having some serious trouble this morning because of options expiration and more volatility and news-driven everything. So could this look totally different this afternoon? It's possible. And I would assume this is pretty teeny tiny company given the volume. Any other thoughts on Cadre, if I pronounced that right?
Yeah, and we've pointed this out a few times on several videos, but the trend roadmap back on September 4th, when the short-term uptrend kicked in, it was kind of like that early cheat, and we talk about that sometimes the trend roadmap can really be helpful for that to happen. But then it was even before, and Scott, I know you love trend lines, from 40 back in January, coming right, slicing right down to that 34.6 that market surge, yeah, right there. You kind of see a really neat little trend line that the trend roadmap even beat that trend line, but that's the second indication that something good is happening here with Cadre. And then it continued to work up that base, and now it's in a buy zone. So if you're in it, Chad, nicely done. If you're looking to get in it, yeah, it's a bit extended, but in a buy zone according to market surge. So there you go.
Nice. Okay, Jason gives us Celestica. We actually had our pause on this during the pullback earlier in the year, and this was a hard one. This is a very volatile company from a price perspective, but Celestica, manufacturer of electronic parts, has been a great stock. So, Jason, well done for sticking with this. I know, I think you might be our neighbor from the north, and if it's the right Jason, and this has been a great company out of Canada. So in general, you have double-digit earnings. It's probably heading from mid cap to small cap pretty soon. Number 12 on our billion-dollar fund manager report in a short-term, long-term uptrend. The long term's been going 2 days after the low. We were somewhere in here messing around, got shaken out. But here is your long term, and then the short term. It's probably gone on and off a few times, but the more recent one was over here, so it kind of gave you this more recent 11% pop. So if it were me, if I think you're doing everything right, I think this is still, I would assume, more volatile for you mentally, but doing well. Funds are here, trend is here. If it was new capital, I'd be patient, but if you're in it, well done. Anything
Yeah,
else
and just to
before
clarify, yeah, going from small cap to mid cap, right? Yeah.
yeah, did I say that or something different?
Opposite. So I just want to clarify that it is likely, especially with this kind of move and the increase in its stock price that it's going to mid cap. Yeah, I would assume
Oh
so.
yeah. At some point, yeah, they'll consider it a mid cap. And whenever
Yeah.
you have to think about indexes, because indexing is really important in today's world, and the mid cap index is a much smaller basket than the small and the large. So when when you grow, it's great, but then they remove you from Russell 2000 hypothetically, or they remove you from the small cap basket, and then they add you to the mid cap. It actually hurts you, and then it helps you greatly when you get back to the S&P 500. So it's this really strange world that you actually have to think about because indexing is so important.
And by the way, one other point about Celestica before we move on to Estee Lauder is, or Estee, I'm sorry, Estee Lauder. But Celestica, I do own a position. I position size this very small because of the volatility. So nice gains, fantastic, but I'm always managing risk. And so my position size was reduced because of the volatility of Celestica. So anyway,
And we
let's
have
go
a
to
few,
Estee
yeah,
Lauder.
we have a few advisory clients with this, so we hold a position for them.
Yep.
Estee Lauder. I said that right. So Boyce, very Michael Burry of you. I love it. Double-digit earnings. It's had a really horrible runs. You can kind of see that it fell apart. The 200-day moving average is coming from the top left of your screen, and now you have a bearish to bullish reversal, and you're breaking out of a flat base. The funds have been holding. Short-term, long-term uptrend. The short-term trend just started. So market surge would say you're in the zone. You're only 6.8% from the more recent move. So if the world needs more value play, this is a value play. This is a big turnaround story. We tried a few turnaround stories in our newsletter and advisory that some of them haven't worked. So good examples maybe we haven't played Starbucks, but I've been watching that one. We tried to play Nike, didn't really work out so hot. Some of these turnarounds can be really profitable. So I hope that's helpful. So the funds are holding, the trend is there. So far, so good for I'd say entries or existing. Anything else?
Yeah, yeah. And by the way, specifically, Boyce asked he's in it at 70, so he got in it right below the 200 back in June, I assume, or maybe further back, but let's assume June. And so, Boyce, you're trying to decide whether to keep or sell. To me, the fact that this is now making new higher highs and it's doing nothing wrong. So I'd say manage your risk per your process. It's in the buy zone. It's now making new kind of, let's call it midterm to short-term highs. So I'd say just keep on keeping on and just mind your risk.
Yeah, and it's up on a down day so far today, which is another
Yep, yep,
positive sign.
yep.
Excelsius,
Yeah, yeah. That's better than I could have done.
Excel I honestly have no idea how to say this. I'm not going to pretend Oliver.
Exalisk. I can't even say it. Go ahead, go ahead.
I think they've had a couple of years ago, they had like SNL, Saturday Night Live skits around medical biotech problems that you couldn't even pronounce, which is
Yeah,
pretty kind of, it reminds me of this. So
yeah.
short-term, long-term uptrend. The short-term trend just tried to come back. This has been going for 483 days since 2024, before this chart's even showing it. So this is a novel molecule therapy to treat cancer. How cool if they could really help there. You have strong earnings this year. You have decelerating earnings next year. That's an estimate. They don't know. The funds aren't here. It's riding the 200-day simple, and it's been shaken and shaken. And I still see in the short term you're making kind of higher lows, and you're actually, if you can kind of get back over 4178, that's where I'd be a little bit more interested. Can it fill this gap that I don't know what on earth happened, but it could have been anything. So I'd say be cautious. And I would have your line in the sand pretty tight under this low with maybe a little bit of room under, and then see if it can kind of fill in the gap. but I would expect a lot of volatility on something like this and something I can't even pronounce. Anything else?
Yeah, and Oliver, the only thing I'd add for you is if you have to be a 200-day moving average type of person, a lot of folks are, that's kind of the line in the sand. This is a great example of why you may want to be careful by using precisely the 200-day SMA as an example. Because to Scott's point, you would be chopped around big time, in, out, in, out. So suggestion might be to use a buffer. So maybe it's plus or minus 1%, 2%, or plus or minus an ATR. It's your call, Oliver, but just suggestion that whether it's risk management or when you get in, don't, if you kind of use a precise 200-day SMA, you might kind of get a lot of whipsaw like you're seeing in this chart. Perfect example of it.
Yeah, good call. All right, we have two ETFs coming your way. Jay, thanks for sharing this. This is a FAN, FAN, Global Wind Energy. And this one seems more, obviously, it's international companies. Maybe you recall a name like Vestas after it's been kind of more of a common name. Uh, ETFs can handle heavy or light volume, but it's in a short-term, long-term uptrend. Obviously, there's no billion-dollar funds. But you're seeing a world where you had a cup and a breakout and a flat base and a breakout. And today it's just kind of chopping around 20. The trend is there. And I would maybe expect it to pull back to its 21 EMA is something that I would expect. But I do see volume. I do see a pretty interesting trend, whether it's wind or solar or alternatives. They tend to do better historically in the Trump administration if you go back in the time machine of his first term. So this is interesting, and obviously we need a lot more energy sources. So this is interesting. Any thoughts on global wind energy or its constituents?
Yeah, and this is truly global because you look at the top 10 that we got off to the left there, and you can see it's all international type of entities. So, yeah, so I think that's interesting. And when we get to the next one, I'm sorry, like probably what, 4, 5, 6 tickers later, we get to the next ETF, you're going to see it's kind of more, I think, oriented to the US as memory serves. So it'll be interesting to see the contrast.
Yeah. Speaking of energy, GE Verona from Esther, thank you for this. So this has been a great spin-off from the GE family. So they went into three parts: healthcare, clean energy, and then what was the final one? It was more like aerospace.
Yeah.
And
Yep.
you have great earnings this year. You should have more great earnings next year. They have a massive backlog, but all good things just pause. So you have a cup, you have a breakout. For some reason I drew a trend line or someone did, and then you have a flat base, and you're now in a short-term downtrend. This would be day two. So could it kind of hold the bottom of the structure? That's what it looks like. The long-term trend is still intact. So if one owns it, I see no issue. Maybe one to want to lighten up if you break that 588 with a little bit of a buffer. But could this thing turn around and kind of rip back up and do well with earnings like that? I don't see why not. So the funds have been holding. They went from buying to holding. The trend is not perfect. So for new positions, I'd be cautious and be patient. But for existing positions, I see no issue. And I think the question was something like, did it recently fail? Sure. It's making now lower highs, which is not positive. So I'd be cautious at the moment. Any thoughts on GEV?
I would actually argue that I don't think I don't think there has been a breakout. It hit new highs and it's been in a lovely 15 to 20% consolidation. And so it's doing its thing. It's kind of rotating around a couple of the key moving averages. So, Esther, if you're in it, I'd say mind your risk and that 588 level, like Scott mentioned, or maybe 565, depending on where you're in at. If you're looking to get into it, I would, at this point, I'd want to see it start working back up and hit back into a coast signal or do a full-blown breakout above 677.
Yeah, and that you'd want a gas signal. Okay, we got
Oh, did I
John.
say code? Yeah, sorry, gas signal. Yeah,
There's
thank
a
you.
million funny things we say. Galaxy Digital, GLXY, digital asset blockchain business offering financial products. So this is a recent IPO. They're kind of fun. They're not making any money consistently yet, but they're probably reinvesting. Funds have been holding, so there are some funds here, but I haven't seen any accumulation. You have a cup, you have a breakout, and like most IPOs, because if you think about it, they're raising money. They're trying to grow at this point, and they need money, so they become public. And then that you have a double bottom that shakes out probably most people, and now you have another double bottom breakout from the midpoint. And so far, you shook out one more time, and you're up here. So 9-9 was a really good signal. So that would have got you in somewhere in here and you'd still be holding. If it were new position, new dough, I'd say be cautious. Look how choppy and wild that is. But I think this is a really interesting company. It's a really interesting space. Obviously, a lot of this is how Bitcoin goes the system, and Bitcoin's on a coast. So that's my thought. I would say funds are holding. I'd love to see them buying. And then I think that first signal has been so far a good one from the trend roadmap. Any other comments?
Yeah, you usually see crypto related equities kind of follow the trend of crypto and Bitcoin specifically. And this has had a couple of down days, including today, but it really hasn't been kind of kicked in the shins like Bitcoin, as an example. So, yeah, that's definitely one to watch because of that and everything that you covered, Scott.
Cool. NRG from Nancy. Nancy, thank you very much. This has been on our radar. So our watch list is really small today. So for members, thank you. Just go check out the live sheet at the bottom. There are stocks and then ETFs, top five, and then any new signal changes. But NRG had the funds are here. So number 26 on our report. So that's a great score. Short-term, long-term uptrend. It's been choppy. So you had this. It's a out of Texas, an energy provider. You had this huge gap up on, I would assume, news related that they are in demand. And it's been chopping sideways ever since. And you formed a cup and you haven't got the breakout yet. So we've been watching this one closely based on our systematic approach. So if one is in it, whether it's on 1013, you have a teeny gain. Whether it's back during the very lows of April on 4-9, you're doing super. But I'd keep your eye on this one, waiting for that kind of next little push higher, and off it goes. Any thoughts on NRG, Energy for Nancy?
Well, just one quick observation that I just literally noticed looking at this chart and listening to your recap. We don't often look at PE ratios. It's just not something that necessarily factors into what we do. I know it is something that some people really like to look at, but this PE is under the S&P. Now, for something that's kind of utility energy oriented, that's normal. But the fact that energy is kind of considered a growthier play these days, it's kind of interesting that the PE is below the S&P. So just quick observation.
Yeah, I like that. Okay, Alex is giving us Nutrien. So fertilizer, feed products all over the world. You have next year, you are not growing, a low PE, which Alex usually gives us value tickers. So thank you for that. You're in a short-term downtrend within a long-term uptrend, which came right after the lows of the market in April. So long-term trend, it hasn't been fruitful at all. As the fertilizer space, it's been, I'd say, comparatively relative, kind of poopy, like fertilizer. And it looks like this is your low. That was your full
Not be
shake.
using those technical terms, Scott, please.
It's a fertilizer, so that's you can know what that smells like. I would say it's interesting. I'd be really cautious. I see tons of skyscrapers of selling. The funds aren't really here, and I think I don't know what the yield is, but if it broke 54.67 on some serious volume, I'd say really watch out. But it's still holding the 200 day. I'd like to see it make a turn, which it hasn't happened. So I'd be cautious on all fronts on Nutrien. Mike, why don't you help Leslie out with Navitas?
Navitas Semiconductor, not one that I had followed up until this point. So, because it's not covered by billion dollar fund managers, and I hadn't encountered it before. But a couple of quick observations. If you're in this, Leslie, fantastic. You've got not only a uptrend, long term, short term, but you've got a clear overheat. And here's the thing to consider, Leslie, is the RSI, at least as of us filming this and taking a snippet, 86.4. And what we do is we very seldom sell proactively. We want to let a trend continue as long as we can let it. However, our exception is when an RSI hits like 88 to 90,
which it
and
did
you can see
yesterday.
how much this one is up, that we start taking risk off the table, profit off the table. So, Leslie, what's our point? My point is that this has had kind of a parabolic move the last week or so out of that flat base, or I'm sorry, cup base. So maybe consider, like, watch it closely, consider maybe taking some profits. And if you're not in it and looking to get in it, definitely wait for a pullback. Scott, what say you?
No, that's a great comment. Sorry, I interrupted you, but I would say yesterday's bar at the high was over 90. So on the relative
There
strength
you go.
index, that
Yes.
would have been our signal to take some down.
Yep.
So um, could it surpass it? Of course, but that's a hot stock. Well done and job well done getting a hold of this one. If it were new money, I'd be really patient. I think that's
Yep.
pulling back.
Yep.
Steve gives us Optimize RX. OPRX provides digital health messaging via electronic health records in the pharma industry. No funds. You have a short-term, long-term uptrend. I think the trend roadmap would have been your friend here. So on 4.9, you got your signal for the long term, somewhere over here. And on 10.8, so that would have been just recently, you would have got your short-term signal. And to me, it looks a little extended. If you're in it, Steve, well done. This is making money. Again, this is growthier parts of the healthcare space, which I think should see some love. I think this is really interesting. Mike, any thoughts on Optimizer RX?
Yeah, I think you covered it. Steve, if you're in it, nicely done. And manage your risk. And if you're not in it, probably be a little patient.
Yeah. Why don't you do this ticker for Tony, another clean energy?
All right, so this we had the wind ETF, and this is kind of related. This is kind of more broadly clean energy. You can see the holdings off to the left. A lot of U.S. or North America based type of tickers or companies, including, for example, Next Tracker, which we've looked at over the last few years, Lithium Americas, etc. And you could see it's clearly in a gas signal, short-term, long-term uptrends. And however, it has pulled back the last couple of days, pretty significantly. So Tony, if you're in this, nicely done. You've got a great move up. If you got in it, for example, after that really wide cup and handle, fantastic gains. But I'd be watching kind of this one, managing your risk, whether it's a 21 or whatever risk you use, Tony. I'd watch this one for a potential pullback down to earth. No pun intended. I guess pun intended. There we go.
And this is really interesting. Thanks for sharing this one, Tony. I've actually seen a bunch of these tickers. TE, LAC has been acquired by the U.S. government. We just saw Navitas. We talked Next Tracker. There's a lot of these tickers that are in the TAN ETF, but this one's kind of more fun. So thanks for sharing it. We'll keep this one on our radar. I agree with what Mike said. We're gonna go. Josh gives us Praxis Precision Medicines. Obviously, wow, on a big gap up. No, they don't make any money. They help the central nervous system disorders and genetic insights. You have an RSI 95.3. So you're on an overheat. So, Josh, amazing job. You can barely see it, but a cup and a handle. And you got your tell if you're playing biotechs, and it had a huge gap up, most likely on massively positive news. And this would be something where take a teeny bit off the table, or maybe just kind of have your stop in there, even though it's could get shaken out at any moment. But this is really something red hot that they're doing. So I'd be super patient for everyone. But if you're in it, amazing job. Any thoughts on Praxis?
Yeah. So just to be clear, at an RSI 95.3, I'm assuming yesterday with that big move, that big gap up, that the RSI sometime during yesterday's action popped over 88 to 90. So that's when, Josh, we would have been taking some profits off the table. The really the only time we proactively take profits. But so Josh, kind of definitely follow your process. You do you, but we're just telling you what we would do in terms of risk management and the watching the RSI.
Yeah. I mean, 238% in 3 days, A plus.
Yeah.
That's amazing. Okay, John gives us rail, Freight Car America. This is aluminum bodied coal carrying rail cars. So uh, you're actually seeing really big earnings acceleration this year, more moderate, but double digit next year. It hasn't moved a lot, which is interesting. But in September, you got your short-term and your long-term signals somewhere in here on this little pop. So we see what you see. So far, it's not that exciting. I don't know why. Maybe it's because it's a team, a very small cap stock is maybe my guess. I know a lot of the aluminum companies have been doing extraordinarily well as it goes from precious metals and it kind of spills into other metals, industrial metals. But I don't know why. Maybe 10 seems to be pretty psychological level. But it's hard. This is a hard one. The funds aren't here. It hasn't been that fruitful. Maybe you know something I don't know, but if it can get above 1038, no problem. But if not, it seems to be really tight, and I don't know if that means something. Anything, Mike?
Yeah, I'm sorry. You may have already made this comment, Scott. I was looking up the dividend yield. I'll comment on that in a second. But do you comment on the fact that there's kind of I can see a mental trend line going from that January, February time frame right through that 1210, and it's still under that. So, John, if you're in this, manage risk. If you're not in it, I'd wait for some more positive action and possibly that trend line to be breached. But, ultimately, John, you follow your process. But what's interesting, what I was looking up, Scott, is I just assume rail would be kind of a dividend play, but it's not. Zero dividend. So they must be in growth mode. Don't know the company very well, but that kind of tells me that they may be in reinvestment mode, no doubt.
Interesting. Okay,
Yeah.
Rob gives us Snap. From knowing Rob for years, he's been in Snap for years, and I feel like every younger person uses Snapchat, and every
Yep.
older person doesn't get it.
Yep.
And they are still losing money. How are they still losing money? Like I feel like everything was like making money, but some reason Snap is bleeding. So it's in a short-term, long-term downtrend. I feel like they get these big pops on earnings and then they hit this fades, and you just had a drop in August and you kind of filled it, but you're underneath the 200 day and you keep hitting your head on it. And at some point, they'll consider this cheap or someone will pick it up for 13 billion. But this has been just torture, and I'm sorry that that's been that way. But the funds have been selling. The trend looks stinky. I hope the lows are in for you. This is your low at 690. I really hope that's your final low. But I'd be cautious. This is not. This is nowhere near great merchandise in a 3-year bull market. So I'll pivot from Snap unless your daughter is using Snapchat, Mike.
Oh yeah, my daughter and wife use it every day. But I'll make a quick comment. You know what really tells the story of Snap in a nutshell is that market surge RS rating line. You look at it on the far right, it's RS rating 11. So basically what that is market surge comparing the action of Snap over, I want to say, I think it's 6 or 12 months, I forget which, comparing that to the overall market, the S&P 500. And the 11 says it all, that it's been performing in the bottom of the pack, and you can just see it by all the action.
Yeah, yikes. Then we got Rom gives us UUUU. That's four of them. Energy fuels. Losing money, should be making money next year. This is in the uranium space in my home state of Colorado. It's in Utah, Arizona, Wyoming, and New Mexico. It's in a short-term, long-term uptrend. Look at that. Boom. Holy smokes, right? So you got the signals in June and August, and this has been amazing. So thanks, Trend Roadmap. Today's been tough. I mean, you went hockey stick parabolic. My guess is that probably went relative strength skyscraper, and now you're falling apart. And let's see, can it hold the 21 EMA, or maybe does it go all the way down to the 50? I'd be really cautious at this point. New money, be very cautious. Existing money, I don't see anything terribly wrong. That's a pretty good wick on a terrible day. Thoughts on you, and I'll get the RSI rating from a couple days ago.
I just pulled it up, and yeah, it's super interesting. So 3 days ago, the RSI hit 87.7. let's call it 88. You round up to the nearest whole number. And this is the third time we're kind of going into it here. Third ticker where 88 to 90 RSI, we look to start taking risk off the table. And you could see what happened. 4 days ago, kind of hit that peak, and now you're pulling back. Still fantastic return, assuming you got into it in August. But I'd say, Rom, just, maybe kind of look at maybe cutting down your risk is, I guess, our point.
Yeah, that makes sense. Why don't you help Leanne with Vertiv?
Yeah, Vertiv, full disclosure, I do have a piece of Vertiv, relatively small piece because of the volatility. It is a volatile ticker. Uptrend in long term, short term, all aligned, but it is slightly into overheat, Leanne. So, and you can kind of tell by the chart, it's had a nice move over the last, call it 6 weeks. And by the way, another example where our trend roadmap nailed it with regards to a short term signal on September 10th, kind of that early cheat getting in, and you've had a nice, what, 28% plus run, even with a little bit of shaky action the past couple of days. So, Leanne, if you're in it, say, let's manage risk, and I'd say use, whatever risk unit you have, but 21 seems like a natural point or that buy zone. And if you're looking to get in it, I'd say wait for a bit of a pullback. Thoughts, Scott?
Members. So this is number 14 on our billion-dollar fund manager rank. So you can just simply go to the members area, go to
Yep.
the billion-dollar fund manager rank, and you would have seen it go from coast to gas um, on 910. And lo and behold, it's done super 28% in just a month. So definitely use your resources, and we hope we use them. So we can't catch everything, but we hope that's helpful. Okay, we've been going really long while, and we're on the V's, and we're on Verizon.
Last one, actually. Last one.
Last one for Chuck. So Verizon has been in a tailspin. I don't totally know the storyline, but I would tell you the funds aren't here. They don't care about the 6.8% yield, which is a really nice yield. And it's in a short-term and a long-term downtrend. So the question is this your low? That's my question where I'm pointing, which is like 39 and something. So 40, 40, 40, 40, 40, 40, and it breaks. That's not good. I mean, 3% earnings growth, two this year, three next year, PE of 9. The question is can cheap get cheaper and get ugly? This is tough. I mean, that's a tough gap down. Well, I don't know what on earth happened. Was that could have been earnings? Who knows? But earnings are coming on 10/21. So no, this would be scary. This is the trouble with dividend payers sometimes, where it's like that's great, it's going to pay me 6.8, but you just lost that in 5 seconds. So my thought, Chuck, is be cautious. Maybe you make a little bit. It's so bad, it's good that it kind of runs back up, hits the 21, and then rolls back over. That'd be my caution. So I hope that's helpful. This is a tough one. I hope it does better for you if you're in it. If not, I would be very, very cautious. Final words on Verizon.
Yeah, I've never been a big fan of dividend investing. Yeah, 6.8% yield is attractive, but Scott, you just nailed the point where you could lose that in a heartbeat, or in the case of Verizon over the last week or so. So, if this is a long-term play, you've been in it for years and years and years, Chuck, I guess you definitely follow your process. The yield is nice, but with regards to protecting capital, yeah, we would be out of this no doubt.
Yeah, and so I hope that was helpful. We covered a ton of tickers. I hope this was helpful to you and your process as you go through all of this. Thank you so much for being a member. And if you're like, this would be so cool if someone could do this for more of my positions, just let us know. We're here for you. So we want to thank you for being a member. Questions, we appreciate you here, investwithrules.com. We follow the trend, we follow big money, we follow risk management rules. If you're like, this would be cool, I just don't have the time, then just check out IWRadvisors.com. We have our final slide, a big, massive thank you for being a member. I know this is the tougher times of the market where it's more volatile. We have a process, we will follow it, and we will absolutely get through this without massive, severe downtrends. Mike, final words as we pivot to Friday late morning.
Yeah, great session. In fact, having a great slate of tickers to review like this helps to make up for all the bumpiness and volatility in the market. So definitely this has lifted my spirits and Great session. And you know what's interesting, Scott, is last time in September, we got the XTL ETF, telecom ETF, from a suggestion, and that's now in our list of ETFs. And we're going to take a look at PBW and we're going to compare it to TAN. And don't be surprised if you see PBW show up on our ETF list after our analysis. So thank you very much for the suggestions. Love it. And have a great weekend.
Awesome. I agree. I'll stop the share and thank you for being a member. Have a good weekend. Take care.